Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with a wrap-up of the April 2nd, 2009 stock market session for you to use on February, or you can watch it and use it for the analysis for the upcoming week. Like I said, I'm not a day-to-day intraday trader. I plan on holding positions, hopefully. And so let's go ahead and start with the NASDAQ. And one of the things, whenever the sell-off was happening from February to March, that really worried me, that made me think that even if we bounce here, the oversold bounce wouldn't even last that long, is because the sell-off from February to March came on very heavy distribution. So there were very big distribution days, and so that looked the opposite of 2002 and 2003, both real bottoms. So I'm still not in the camp that we've bottomed forever. I really doubt that's the case, considering the economic climate that we're about ready to go into. I'm sorry. If you're going to have a long, long downturn, it's not just going to be a one-year bear market, and then everything's fine. It doesn't work like that, folks. So enjoy the rally. I'm enjoying it, but a lot of my stocks aren't really enjoying it, which is the difference between this rally and any rally I've ever been used to from 1996 to 2007. Since October 2007, all heck is broken loose to the stock market, and still things are working a lot better now because obviously we have 20 longs to our 28 shorts. So obviously we got the longs. Considering that back, I'm going to remind everybody. I'm going to make sure I get the day. Okay, on March 10th, I had 3 longs and 51 shorts. Now, on April 2nd, I have 20 longs and 28 shorts. So obviously, it's been a much bigger change. We've covered more shorts fully than we have at any other time, and this is the biggest amount of longs that we've had. However, normally when things are going to do really well, my longs explode immediately after I buy them. I'm not used to going long beautiful, correct patterns that are just moving out of where I need them to move out of. I don't want to tell too much or whatever, I guess, some people. But I'm not used to seeing it and then not working immediately and producing like 20% in like a week to 2 weeks. And then I can hold it for 8 weeks and know that I probably am going to make 50 to 100% minimum. That's not happening right now. So I just can't be an extreme bullish here. So now that we've stared at this downtrend long enough, I want to replay the now uptrend. Heavier volume on the initial day, but still up 7%. In any of the real bottoms, the NASDAQ was never up over 6%. So the biggest rallies come in bear markets. So once again, the way that we're starting, to me, it looks like it's a bear market rally right here. You don't go up 7% in one day. I mean, it's ridiculous. And then it goes along higher than above average volume, but if you look at the 2 days volume, you can still see at the start of the sell-off, these 2 weeks were bigger. Boom, boom. So now we're here, and then we get another big update, 3.97 heavier volume. That's excellent, but it still can't be considered the fall-through day because that comes on the 4th to 7th day. That comes here, 1.99% gain on the NASDAQ. Now, on the NYSE and S&P 500, it happened earlier, but I focus on the NASDAQ. So I'm going to focus with this analysis in part 1 today on the NASDAQ. So it gets to the 50, and here, right here, if you buy follow-through days, this one was the first follow-through day that we've had since 2007 that looks right. I know in March and April, it looked like we could have possibly have rallied, but remember, as we went along, we never got any accumulation days over the average in April and May. Like, we got very few, and the volume was much lower than the sell-off volume that started in 2008. We still had RIM, Apple, and Baidu and Goo look like they've and Pot, Moss look like, and TNH look like they put in extreme parabolic climax tops. Things didn't work right. And then now looking back here to May, June, July, I'll remind you some of my longs that worked. DGLY from April to May, and which is not long, and then PDO from May to June. However, the signal that all heck was going to break loose was when ACM set up in a near perfect chart pattern here. The breakout didn't work, but then it bounced off the 50 on a gorgeous pattern. I mean, it looked near perfect, and then failed. Failed within a week and a half. So that right there was just like, whatever. You want to call that a rally? That's fine. But since then, nothing else has looked like it. Every follow-through day that you guys saw after that, I told you was going to fail. July, I said fail. September, I said fail. October, fail. November, fail. However, this time, the big volume surge on this day changed my mind. And now, as you can see on the 18th, I'm going to go back and look at my diary really quick since I just don't know offhand. I mean, who in the heck really knows? unless you have an IQ of over 160. And on the 18th, I made 4 new long purchases. And out of those 4 new longs, 3 of them were in the very top number 1 sector. So now here I am getting back to work. And after that day, I was long 10 stocks for the first time. So now I was long 10 stocks for the first time in God knows how when. I guess September. Or maybe not. I don't remember. No, February I think I had that, right? Yeah, in February I had 10. But I didn't have 10 of this quality in a very long time. So now let's continue to move on. We pull back. We have 2 big ugly days. We're down 2.28%. I'm sure some people are calling this a huge decline because that's another thing I got a problem with a lot of subscribers right now and non-subscribers. If a stock has a 20% intraday movement in it and you buy it and you cut your loss at 8%, do you see what's wrong with that picture? Now, a stock that moves 2% intraday along the way forever and ever, then has a 10% drop, that's huge. Don't tell me, oh my God, the stock's down 8%, what a huge drop, when the stock is $1 and averages 20% swings intraday every day. I mean, I need you newbies to realize, and new investors to realize, CanSlim quality stocks are $20 or higher. If you're going to analyze a sub $20 stock like it's a CanSlim stock, seriously, you need to change some rules. And to be honest with you, you new investors, you can't do that. So until I tell you to make changes, you don't make changes, and you don't go off the CanSlim path. Stick to these CanSlim stocks. Anyway, going back to the NASDAQ, the 23rd, boom, we're up 6.76%. Volume's lower. Once again, you get these kind of rallies, these are bear market moves. However, this will be our good bear market rally right here, because now I got the higher volume here. We've recouped the losses of the past 2 days of the big 6% gain. So yeah, let's keep going long. I mean, the stocks are working, right? I mean, 2 of my longs on long term. Here's one, AIPC. It's still holding the 50. It's still going up. So, you know, there's no reason to change anything really right here. Back to the NASDAQ. Now we fall down 2.52%. People are like, oh my God, what a horrible day. Look at the volume. It's below average. It wasn't that bad, everybody. And then, of course, the next day, we're up on a huge volume, 0.82%. But the key to that day is the lower days happened or were happening where I think the market was matching them with 30 minutes to go. And then in the last 10 minutes to 5 minutes, the market screamed higher. And they went out as high as they could on that last leg. And the volume that became behind it was not only huge, but leading stocks that had the biggest price gains, the highest relative strength ratings, were taking off during that time. The rally earlier in the day that led to the high of intraday at 1554 was all laggards. But then after the dip down and then the re-move back up, it was all great stocks. That led to the very next day on the 26th of the market moving up 3.80%, which is more normal, what you normally want to see, with volume much higher. Now, on my charts, I have now sticking out and showing me clearly 1, 2, 3, 4, 5 clear green tall bars in March. The good news about that is 2 of them now, which I always want, I want more than just 1, are now bigger than the volume on the downtrend. So now I have even more faith that the rally could last longer. But right after that big up day on the big volume, we pulled back 2 days in a row, and people are like, oh my God, the NASDAQ's down 5.4%. I knew it topped. I knew that it was all over. However, once again, these people don't look at volume, obviously, because the NASDAQ, when it had its 2.63% drop, came on lower volume, and then when it had its 2.81% drop, came on even lower volume. And during this happened, I'm going to go look at my thing to see how my longs changed. So let me see how they, what? So let's see how they changed from the 27th and 28th. So on the 27th and 28th, I went from 18 longs on the 26th to 18 on the 27th to 18 on the 30th, because from the 27th they went to the 30th. So I didn't have any full sells. So during the pullback of 5.4%, my 18 longs give me 0 sells, 0 full sells. So what are we freaking out about, everybody? And of course, then I'm proven correct because we had the 1.78% move on the 31st on higher volume. Then we have yesterday the 1.51% move on higher volume. Then today we have a 3.29% move on the highest volume since the rally started, now giving us 3 days of volume bigger than the volume on the downtrend. So the NASDAQ is clearly in a buyable position here on any pullback. If the NASDAQ pulls back and volume's lower, don't freak out, everybody. I don't understand why everybody's like, and every pullback, market's topping here. This is going to be a top right here. You better believe it. Look at this market. It can't go on much longer. I mean, look at what Obama says. Sorry, guys. I don't give a crap about my opinion. I don't give a crap about your opinion. I only care about one thing, this chart. And this chart tells me I'm going up on big volume, and I want you to come along with me. And I'm going to say, okay, until it says I'm stopping. And when it starts reversing on heavy volume, like on 220, and you start having volume days of 220 with price declines like 223 of 3.71% at key resistance levels of 200-day moving average, you know, okay, the rally's ending. Another thing you'll notice is you'll go from 20 longs or 30 longs to 15 to 25 longs. And also your longs will start looking worse and worse. They just won't be as nice. So I just want you to remember that. Anyway, I'm at the 11-minute mark, so I got to wrap it up here. I'm going to go into the rest of the index charts in part 2, and if we need a part 3, we'll use a part 3. I hope you're having a great Friday so far, and keep on having it. I'll be back with part 2, subscribers. Aloha.